Welcome to Java. Thank you kindly for joining me. It's November 18th, 2024. It is also Monday. So I hope that everyone had a wonderful weekend. I had a bit of a long one, and it gave me the opportunity to look into a couple of things. And I'm going to speak about a little bit more as we go into this. I believe we are at the very beginnings of one of the largest heists in history. So, we've got quite a few things that have happened over the weekend. I hope you're well rested for this week because it's going to be very interesting. So, let's start as we normally do with our risk indicator. Now, our favorite one, the MMRI, currently sitting at 293. Now, this is not a large movement off of Friday. We've got a couple of other factors that are offsetting between the dollar and the 10-year yield. Now, we've watched the 10-year yield did drop a slight bit, but we've got the dollar above 106 at 106.7. So right now, that is wreaking massive havoc in the currency markets. So before I go into that, we right now, markets pulled back a bit toward the end of last week. Now we're sitting in neutral territory now in the fear greed meter. What does this mean? Means that some of the retailers have pulled out. Now, as we are hitting upper resistance levels, we are watching a little bit of institutional rotation, meaning they are selling off into these higher levels. Now, what is happening today is a little bit different. And the interesting part is that it looks like we're going to open with softer markets, meaning they're a bit down at the moment, with NASDAQ and technology taking the worst hit. Now, we've got the volatility index up. Gold and silver and oil are all up. Now, this is kind of a fear trade issue that we're seeing here. Now, with this, as I was saying, the 10-year yield, it looks like it's dropping, but it's slightly beginning to recover this morning. So that is what is going to pressure the markets. Now, we've got futures a bit flat, mixed, and some of this is due to news we had on the weekend. So with this, we've got cryptocurrency, Bitcoin, 91,800 right now. It was about 92 for a while. So this is pushing up altcoins, and it's going to create what we call altcoin season, as money is just flowing from other areas. Now, where is it flowing from? Well, first off, we've got this one is talking about Wall Street's banking giants loading up on Bitcoin and Ethereum ETFs. Now, they're loading up not just on the ETFs because they are limited to how much they can buy of the cryptocurrencies themselves, other than as backing for their ETFs. So they're basically buying the assets, the cryptocurrencies, and reselling them through their ETFs and buying them back themselves. So they've got another circular uh, type of issue going on here, to where they are buying, selling to themselves and charging you fees along the way when you buy into their ETFs. Now, there's a little bit more about how this works. We're doing larger scale of this through the government and through the United States dollar. I'll go into that right now. So I've got Asia and Europe markets mostly lower. The dollar's uptrend continues. Global markets, looking at the strength of the dollar is crushing all other currencies right now at the moment. So the euro is weaker. The yen is definitely weaker. And we've even got some of the other currencies, typically higher, Great British Pound, all much weaker relative to the dollar. Now, the dollar is still being inflated away, make no mistake. But what this is doing is pushing all of the world's money through their various currencies into the United States market and into the United States dollar, as well as cryptocurrencies. That's why they're all rising. Now, why is this happening? It's because after these trades, the United States has the largest, most liquid market. And through the protectionism that is a promise that has been made with the new incoming administration, They're all betting on the United States stock market now in various degrees, as well as the technology. Now, this is what I'm speaking of. This is the largest heist going on in history. Now, for all of the Americans out there that are laughing because right now the US dollar is stealing from every other country that uses the US dollar in the world, the US dollar is saving you for dessert because the inflated dollar is going to cause domestically later on massive amounts of inflation, and there are some serious issues ahead. So, just because the stock market is pumping recently, this has not taken away the risk level for what's going on now. A lot of people believe that the new administration, with the government efficiency, can do their job. We'll see. Now, what happened over the weekend? We had the current administration literally trying to go out with a bang. They have approved Ukrainian strikes deep inside of Russia with US missiles. Now, Putin has already said that they would retaliate and they would consider that if this occurred, that they would consider NATO as part of this. And it's very likely that he would take countermeasures in some sort. So, high danger. This was a reckless move, but in the long run, this is a distraction from what is really going on with the currencies. So we've got bombs that we've got blowing up through US dollars in the currency markets. And I believe the larger trade in what is really going on is over in Asia at the moment. So with this, don't lose focus. Okay. Sentiment right now, we're back to neutral. For now, we've got price to earnings still near an all-time high. Absolutely ridiculous valuations, if you will, and the silver market still being manipulated, even though it's recovering a bit. We've still got silver right about the $30 level. So anything below 32, it should be much higher priced in US dollars. So let's go forward. With this is a little bit more of what we can see in a chart of what is happening with this currency trade. Now, this chart on the bottom, these are the two stock markets basically showing the divergence that is going on. Now, the blue is United States S&P 500, and the orange is basically representing European market and watching the divergence that is happening. So all of the money from this market flowing into the US markets. Now, this is the US dollar versus major currencies. This is a bit of an older chart, but just absolutely crushing other currencies, as you can see here, including Canadian dollar. And this is stealing from their value at a more rapid rate than even inflation. So we've got Jim Rogers. He is a brilliant man, renowned investor for many, many years, warning that the America First policy will trigger the largest recession ever. And he is referring to the trade imbalances mostly with the East, which is what I alluded to earlier, namely China, but also Japan and Malaysia. So now we're including Philippines and Taiwan in a lot of these trades. Okay, to lighten this up a bit, we are expecting earnings this week. So this is a calendar of the earnings that are coming up through this next week. The following week, I expect volumes to be coming down, and I'll talk about that later. Now, we've got Thanksgiving, the end of the week. So next Thursday, markets will be closed. This Thursday, open. Next Thursday will be closed for the holiday, as well as, I believe, Friday. Be very light next week. So let's go into the calendar right now. We're getting a few things this week, but not a lot of major things going on in comparison to what we have been watching. But the larger story in the back is if this inflation starts running again, that they will not likely cut in December as the market believes. So that means there has to be a bit of a pullback from them believing all of this money is just going to flood in, which is what has been causing the boom. Now, for now, it can still continue, and no one knows for sure, but for now, the bull market could continue. They're looking to open weak and a little bit weaker today, so we will see how this plays out. We've got home builder confidence index. Could be a lot of chop today without a lot of resolution. Now, I'd just like to name out that we've got DJT, the World Liberty Financial. It appears that they will be using Chain Link. Link has long been one that was tapped a while ago by the United States government. So it's very interesting that they are using them as the DeFi or decentralized finance platform of choice. Now we've also had BlackRock have just received their license to operate in Abu Dhabi. They are going to be moving a lot of their cryptocurrency ETFs and business there to become a hub because their tax structure is much more favorable. Now, I want to jump over here to NVIDIA's story because this could hit their stock today, and I want to make you aware. Their new Blackwell chips are reportedly getting too hot to handle. This kind of cute little play here, but as they're racking them in the servers and they start stacking them in these large data centers, it appears they're overheating. They could melt out and they're reduced performance. So they're not working well. They're not being delivered as they need to be working. So this is very large negative for NVIDIA. On the other hand, counter set this, however, the current administration again is attempting to offset the last days that they've got coming in. They've got a lot of money. They're trying to dole out as soon as possible, write out the maximum amounts to the CHIPS fund, which they had put out earlier. So they're still writing checks out to these large chip companies that are worth multi-millions and billions of dollars, and they're using taxpayer money to subsidize them. So along with this, we've got human level artificial intelligence could be here as early as 2026. That's within 2 years. And this is coming from the CEO of Anthropic, which I actually kind of like this artificial intelligence. And we've got a couple of others that I was posting in the Discord group, namely the Gemini Google version and the Microsoft Copilot version, both having issues not being very nice at all towards humans. So with this, I've got a couple of other things I would like to bring up in the physical section. South Korea now questioning arming as the new administration is coming in because they see major pullback from the wars. And this is going to hit production, if you will. It's going to hit the GDP of a couple of countries as well as the United States. So we're going to keep an eye on this forward. We've got North Korea calling for expansion of their stocks. And this is, as I was saying earlier, so this could hit a bit of the market earlier and make oil jump as well. So just a few things to watch for. I want to make sure you all have a good trading day. At all possible, could be a lot of chop, a little bit of caution. We're going into an interesting week and toward the end of the year. So we typically have a Santa Claus rally. We'll cover that later. I will be in and out. I have a very heavy travel schedule for this week, but I will do my best to get my videos out as close to the normal time as possible. So until I see you again, my friends, stay free.